Good morning, traders. It is Wednesday, the 25th of February, 2015. It's 8 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Overnight news, China's February preliminary HSBC manufacturing PMI is back in expansionary territory for the first time in months. Came in at 50.1 versus 49.5 expected. The central bank speak remains on center stage. Fed's chair Yellen to continue her testimony in Congress today for the House of Representatives. ECB's Draghi in the EU Parliament on quantitative easing. That's going to be very important. Fed's chair Yellen yesterday said that patient stance means the Fed will not raise rates for at least the next few meetings. Will likely change forward guidance, patience language before raising rates. The U.S. dollar remains on soft footing following Fed Chair Yellen testimony yesterday. The greenback weakened as the Fed hinted it won't hike interest rates before the middle of the year. And that's exactly what I've been talking about now for some time. There's just no room to raise rates. It's very difficult for the U.S. Fed to raise rates while everybody else is still doing their QE or cutting rates, as we've seen. And so I don't think that's a threat at all, and I think the market already knows it. I'm definitely not smarter than any of the research groups that are out there watching the Fed much more closely than I do and understands it much more closely than I do. Japan's Nikkei declines for first time in 6 sessions. There's no other news. There's very little. There's very little that came through. MBA mortgage applications came in at -3.5 versus -13.2, so slightly better. A bunch of earnings came out, but nothing too substantial. Other than that, it's a quiet morning. Still looking at Greece as the key player here on what happens next. Looking ahead today at 9 o'clock Central, 10 Eastern, half hour after the open, we're looking for U.S. January new home sales. 470,000 is the expected number. Also at 9 o'clock, we have Fed's Chair Yellen testifying in the House. The general tendency is that the Senate, because it's it's a smaller committee, the Senate committee is much more organized and they're, I would say, more seasoned or something, because the Senate committee testimony generally is more orderly. The House testimony tends to be much more confrontational and there's a lot more rhetoric and there's a lot more grilling of the Fed's chair. So it'll be interesting to see what angles there are. If you want to watch us live, I believe it's broadcast. It's streamed online at cspan.org, and I'll post a link when I have it. I'll post it to Twitter. So we have that at 9 Central today, just a half hour after the open. At 9:30, we have the weekly DOE crude oil inventories. At 10:30, right at the close of the European cash market, we have ECB's Draghi testifying to the EU Parliament in Brussels. You're going to want to pay attention to that. He's testifying on QE. And then at 10:30, we have the $13 billion 2-year floating rate notes. It's a reopening. And at noon, we have a Treasury to sell $35 billion in 5-year notes. And that's really it. That's what's on deck for today. Let's look at the technical picture and see what we have done here. Now, yesterday, the primary hypo was that we're looking for the market to be responsive back down, but not very much. The Monday trade was very balanced, and we ended up not testing or challenging that week high at 2108.75. And the primary hypo yesterday, if you were watching the YouTube video or the Trader Bites, is a potential for chop on the open, potentially responsive, and then we're looking for this high to be taken out pretty decisively. I did say that the better opportunity for day traders is a break down from here off of these new highs of 2108.75, but it is more likely that it's going to break higher. The next area up that I had as a measured move target, so this is my measured move targets chart. You can see the triangles that are forming and the levels that are coming through on those triangles. So far, it's been in the balance from October. It's been very difficult to pull any measured moves because there are none, because it's balanced. But if I zoom in here, you'll see that there's one measured move at 21.1550, which unfortunately I discovered just this morning because I had the wrong low for one of my triangles. But this 21.1550 moved from 21.19. So now we have confluence here at 21.1550 and 21.17. There's a double measured move here dating way back, and they're both at 200%. So beyond that, to have 21.26 and 21.32, and there's, as I said, there's not enough of a pullback. It would be nice to get a pullback here on this run up. We're one time framing again. It'd be nice to get a pullback that's deep enough to be able to pull another more recent and more relevant measured move. But for now, I'm looking out for this 21.17 area. I think that yesterday's trade created a classic completion wave here at 21.1575. I have the suspicion that, and I cannot trade on suspicions, I suggest you don't either, but I have a suspicion that we're likely to get, on the open, we're likely to get responsive up towards 21.13 or so. I expect the overnight high to remain intact, and I'm looking for a rotation down into the 2108.50, 2108.75, which is the LVN and the prior high. And I'm also looking for this to start correcting down towards 2099.75. The primary target now from here is 2099.75, 12 points away, well within reach. I do not see this market going very much higher in the short term simply because of the way it's been auctioning. It did pull back yesterday after pushing to 21.14 to the open on the dot. You can see these dots here. These dots are the opening print. Pulled right back to it, and then it found buyers immediately for a push up to do the extension move or the completion move. So I'm looking for a corrective action here, but you know what? I will not be bearish all day long just looking for that. The market has to show it to me. In other words, if we open and push to 21.13 or so, and we see sellers come in, I'm much more confident that 21.10, the overnight low, is going to be taken, and would target 21.08 half, and then work through the levels one by one. 21.08 half, and then 21.03, 21.02.75 was hit to the tick yesterday. I expect that to be taken out, and then I'd be targeting 2099.75. Beyond there, you have the most recent balance zone point of control. There's some heavy volume here from about 2097, 2098, all the way down through to 2088. I expect it to get tangled up again in here. You can see there's just a lot of these bars show a lot of balance here, but the overall target below in the micro composites 2091. So again, the primary trade idea for today for me is responsive buying back up. May or may not take out the overnight high, but I expect sellers to step in today. and roll this over to start targeting 2108.75 and 2099.75. That's the primary idea. The secondary idea is that it does chop around, it does push down towards the overnight low, and then we continue on our merry way up to 2117 this morning, and then potentially grind up again. Overall, yesterday's range expanded a little bit, but we only traded 13 points on the day session, 971,000 contracts only. That's about 500,000 short of what we would consider to be normal, and it's just very, very bullish. The strength of the bulls in this run up since we took out the 2088.75 has been pretty substantial versus the prior runs up. There seems to be a lot of interest. It feels like the shorts are getting squeezed slowly and deliberately. But there have been good earnings, and there are still reasons for the bulls to think bullish. Again, my intent is not to show that I am bearish or bullish on a swing basis. I could not care less. I do not have an opinion either way. But when I look at the evidence that's in front of me here, we had basically what is a flag pattern since October 31st, since the gap up on October 31st, and have broken out of that flag pattern upwards in a long-term uptrend. And so I have to believe that the long-term players are still comfortable holding on to their positions, and there's no reason to pull out. And so that theme continues, but my view that there's likely to be a pullback here has to do with the way it's auctioning and the way it's putting in its profiles, and it's a short-term view on the market. It's just for today. And if we make new highs, that I'm wrong, and I've risked about 4 to 5 points to figure out that I'm wrong, and that's well within my risk plan. It's well within my risk-reward ratio that I'm looking for. So that's how I'm looking at the ES. A quick look at the Euro Stoxx. I would say a hearty mission accomplished for the Euro Stoxx on their target at 35.40, 35.50. The goal before was 35.53, right up in here. Mission accomplished yesterday. Well done. Beautiful, methodical. If you go back and watch the videos, the YouTube videos, these trader bites over the last few weeks, you'll see that I've been talking about the fact that this area between 34.40 and 35.50 has had a low volume node, a composite low volume node, and it's very, very likely in true classic auction pattern, it's very likely to slowly squeeze into that and fill the area all the way up to 35.53, and it accomplished that yesterday. That's a live and play-by-play example of how the auction works and how volume profiling works, and if it's something to pay attention to. So this morning, the Euro Stoxx opened in the upper range where they closed, and they tested right back to this 35.33 LVN and the IB from the prior day. The IB from the prior day makes a double top with 35.50, 35.33, which is the high of Monday. So you could see that methodically the market has tested, come down to 34.98. Yesterday put in a double top, and then double tops tend to not hang around, despite popular belief that double tops show strong resistance. Statistically speaking, double tops show that there's a weak high in place and it's likely to be broken. And you could see that it was broken quite decisively here. A very, very quick 25, 27 point move on the break here for this product, which is a fair amount. And then this morning it pulled back right to it, 35.33, and is lingering on a balance profile with a skew to the low side. Looking for a rotation down on the Euro Stoxx now because we're in a high volume node. Looking for a rotation down to 35.25 and for it to start testing the levels below. I think mission accomplished here for this product. The crude oil product has been very confused and very confusing. We did put in the April contract, the number we put in was 55 even. I believe it was 54 and a quarter in the March contract, but we've since rolled. We've put in this high. We talked about this high quite a bit, that it's likely to stick around for at least a week, and it did. We tried to test that high. We came up within 25 cents, pulled back, and then we finally broke this 54.75 to 54.91, created what looks like a W formation, which is quite bullish, and the target was 57.53 in this contract. And since then, oddly enough, it just fizzled out and started to move back into the prior balance zone. So this is a very confusing trade here. It's not auctioning freely, in my opinion. It's auctioning more under the control of some external influence. Left to its own devices, the expectation is for it to fill this LV end zone here from 55 to 56 and a quarter, and then to tag the next balance zone up. And that's what I was shooting for last week and earlier this week, but it just doesn't seem to be working there. So that's a failed auction there. That's all I have for you. Good luck today. Watch your risk as always, and be mindful that you have the whole day to make something of what's going on. Do not rush yourself early on, get yourself in trouble, and then just be focused on getting out of a hole for the rest of the day. Okay? Good luck, and I'll catch you tomorrow. Take care.